If you look at these individual days, the vertical lines delineate those separations between the beginning and a new day and the end of a day and starting another. When you look at price like this, it creates a grid. Now, the algorithm is going to look for sell side liquidity below old lows and buy side liquidity above old highs. What you want to be focusing on is the times when the market will change its delivery state from bearish to bullish. How does that happen? The algorithm defines it by what I showed you here. If it goes below an old low and goes back above it, you have to see it trade back above an old high. Once that happens, the algorithm will change its delivery state, and then it will now seek the opposing liquidity. In other words, if it's just recently taken sell side liquidity out, it's going to be looking for a form of buy side liquidity, because that's what the algorithm's doing. It's not able to see your particular stop. The market cannot see your individual stop. The broker can, but the algorithm that delivers price doesn't see it. The algorithm understands where that liquidity is, and it's going to trade to that because it's offering smart money, high level, central bank level. When the market changes its state of delivery, you need to be focusing in on how it will seek that next level of liquidity. We've taken sell side liquidity out. Great. Wait for a old high to be broken. That's these blue lines. So if it sweeps below a red line and goes back above the red line, okay, it's a stop run. But is it a buy because of that? No. You have to wait for it to take out a blue line. Now, don't get so wrapped up in the fact that we have red lines and blue lines, because you're going to look at this and say, which lines do I use? It's going to be whatever line is appropriate at the moment. For instance, if you're looking at this low here, we've ran below this low here. We ran below it. We went back above the red line here. Until we get above this blue line here, we will not have any reason to be a buyer, because it has to trade back above an old high, which is a blue line. By itself, it just gives you the stage in which the delivery state at the algorithm, it won't want to move higher. It won't send a displacement in the marketplace higher until it does this. This is like the first stage that you're waiting for. Once you get this, then you can go in and start looking for more specific criteria to look for setups. It's not an everyday thing, but this is going to give you the choicest setups. This is the one that will give you the ideal setups for that particular week. Yes, that particular setup that week. All right, session highs and lows. The importance of these times of day.
Wow, what you just learned here could change the whole approach to trading. Are you ready to take the next step? Your next big insight is just one click away.